The decentralized finance or DeFi ecosystem as a whole is experiencing a period of rapid growth and much media attention. Therefore, much of the conversation around the DeFi space seems to be focused on hype versus value. As token valuations continue to increase, it's unclear whether their upward movements are fueled purely by speculation or mostly by usage. Recently, finance magnates spoke to Deniz Omer, head of ecosystem growth at Kyber Network, about the relationship between hype and speculation in cryptocurrency markets, particularly in DeFi. Kyber was created during the ICO bubble of 2017 and has managed to prove its fundamental worth in the years since. Therefore, we asked Deniz about Kyber's past, present, and future, as well as his thoughts on the growth of the DeFi space as a whole. I'm Rachel McIntosh, and this is the Finance Magnates Blockchain Podcast. So, Deniz, first of all, I want to welcome you to the Finance Magnates Blockchain Podcast and just say thanks for being on the show.
Yeah, thanks for having me. It's a real pleasure.
Yes, definitely. So can you tell a little bit about who you are and the work that you do for people who might not know?
Yeah, I spent 10 years in finance at a company called Thomson Reuters. So my background is company fundamentals. And I mean, it's always interesting to have that background when you first get into crypto because it's such a crazy upside down world in crypto.
Absolutely.
But yeah, like in 2016, I read about Ethereum on a Reddit, subreddit on Ethereum. It was like explained to me what Ethereum is, and that's when my mind was blown about crypto, about decentralization. And I mean, that's when I kind of fell into that rabbit hole that everyone talks about.
Mm-hmm.
And yeah, and within that year, I started my master's at the University of Nicosia in blockchain technology. So that was really good for getting a foundation in this thing. And then there was the whole ICO phase, like the whole craze. But I was always interested in kind of Ethereum and all the projects and the ecosystem growing around Ethereum. And that's when I think, a couple of years ago, I joined the Kyber to help out with their ecosystem growth. And I mean, that's really been my journey, like 10 years in conventional finance and then into this, crazy world of decentralized smart contract platforms and changing the intermediary balance. And yeah, it's been really enjoyable since then.
Absolutely. So this is so interesting that you've been to one of these blockchain master's programs because that's such a new thing. I think you might be the first person I've met who's actually done one of those. They're getting more and more popular. But I mean, just briefly, do you think that has that helped you, in a practical way, building connections through that master's program, or what was your experience like?
Yeah, for sure. I think it's been incredibly valuable because it kind of breaks it down to different components that touch upon this technology. So it will tell you about consensus methods, but also about the legal aspects, also about money theory and the developing world and finance and what are the pain points in the real world to give you a much broader context of how this blockchain technology can fit in it. Because what I see is many people come into blockchain just from one kind of sphere of life, one aspect, and then their perception of this technology is usually kind of more focused in that area, whereas blockchain, we know, can have so much unimaginable number of applications just because it's a new way of doing everything we've done in society for the last thousands of years.
Mm-hmm.
So and the tutors were amazing. You have Andreas Antonopoulos, you have people from the Ethereum world, from a wide range. So for me, I think it was invaluable to give me a good grounding in this technology.
Absolutely. So I want to ask you about Kyber. For somebody who hasn't heard about Kyber before, what does Kyber do?
I'll try and simplify it as much as possible. And I'll
Sure.
say it's a smart contract that is a liquidity protocol. And I hope I haven't lost people already at that word. But what it basically does is it just aggregates all these large groups of liquidity that exist on Ethereum. So for example, professional market makers and teams that want to provide liquidity for their own token. And we kind of aggregate all of that in a single smart contract and we push it downstream to anyone who needs liquidity on Ethereum. And this includes people who want to swap one token to another. It includes DeFi applications that require the swapping of slightly more complex use cases for building, for example, leverage trading platforms. It's used by merchants who want to accept different kind of tokens from what the end user wants. So it's basically like a world of liquidity, instant liquidity, where if you want to swap one asset for another, it's there, it's on chain, it's transparent. And the beauty of it is that Kyber doesn't take custody of any of this liquidity. So that's like that uses one of the fundamental properties of blockchains and decentralization to build this kind of solution. So that's what Kyber is. It's like a liquidity protocol that aggregates liquidity and serves it downstream to decentralized applications of many, many different kinds.
Right. So if I want to use Kyber's services, if I want to use the Kyber network, would I be a dApp creator? Would I be, an exchange operator? Who are the users of Kyber?
So it's basically all of the above. If you're a DeFi, application, and you want to create a 3x leverage product, for example, on Ethereum, and you want to do it on chain, well, instead of having to separately, like a 3x means you borrow DAI, you lock up ETH, you borrow DAI, you get that DAI, you buy more ETH with that, you lock up more DAI, and it's like a circular motion. So instead of having to do all of that in 5-6 different transactions, with Kyber, you can automate it into one single transaction. So it's more cost effective, it happens all within one chain, and you can start connecting it to other applications as well. So if you're a DeFi dApp creator, Kyber is amazing to plug it in, and we have like 70, 80 different dApps that have already done this. Or it could be traders, as you mentioned. It could be like arbitrage, trying to make money off the difference, or it's just portfolio rebalancing by funds. It could be, NFT games where they're selling NFTs, but they want to be able to accept any token that the user wants to send, and it just gets converted to the token of their choice. So there's a whole wide range of users that actually use Kyber. And maybe I can just touch on, like, geographically, over 165 different countries, have shown trading on Kyber, which is like an amazing number.
That is pretty amazing.
The largest market is probably the US, and then you have many European countries, you have Southeast Asian countries using it, and over 100,000 unique addresses have used it one way or another since we launched back in 2018.
I see. So that's congratulations, first of all.
Thank you.
Yeah. So I want to ask you, about sort of where Kyber is in its life cycle. Obviously, you've got a lot of development, seeing as there are users in all of these different countries. But I happen to know that Kyber is one of these projects that was born, was around during the 2017 ICO boom. Many of those projects are completely gone, disappeared from the face of the earth, but Kyber is still growing. So can you talk a little bit about what that process has been like? How has Kyber managed to stay successful, and where is it now in its life cycle?
Yeah. So we always thought we'd grow in phases and kind of prove one concept and then build on top of that, build a good fundamental layer and build on top of that. So when we started back in 2018, we were purely thinking of a simple smart contract that can swap one token to another. And let's make sure that piece is working correctly. Let's make sure we're not no one's losing money. There are no, bugs or anything. So for the first 6 to 12 months, we were purely focused on that. And then it kind of proved itself, and we thought, okay, let's go and look at which dApps can actually integrate Kyber and start growing the ecosystem, because we've proven that these smart contracts can be trusted. And that's where we started getting wallets on board. We started getting DeFi dApps on board. So our next phase of growth wasn't purely just people swapping one token to another, but as each individual DeFi dApp grew, our volume grew with it, because they are using Kyber for their trades. So if, for example, 1inch exchange, if it goes up by 5x, Kyber's volume from 1inch exchange grows as well. So we started growing through the growth of the dApps integrated into Kyber. And then our last phase, and for me, one of the most exciting ones, was very recently, we launched our Catalyst upgrade, which is a huge upgrade on the smart contracts. Plus it also introduces a Kyber DAO, where KNC holders are incentivized to actually set the parameters of Kyber network. So they can vote on how much should be burnt, how much should be given as rebates, how much should be given as rewards to KNC holders. So we're thinking of this wisdom of the crowd kind of steering Kyber into
Mm,
its future growth.
I see. So what is that future growth going to look like? What are the goals and what's the timeline?
Um, well, we're seeing a huge explosion in DeFi in general in Ethereum, and it's been really exciting to see. There's all these crazy new things. And I remember last year I would be asked, what's most exciting about DeFi? And I would always say it's not the things that, are already done, but slightly different, but completely new concepts. And they seem to come up every 6 months, now with the yield farming,
Mm,
yield mining kind of being the latest iteration of that. And then we had the margin stuff before that, DEX aggregators. So we're kind of looking forward of the DeFi space, but we also want non-DeFi areas to grow with it as well.
okay.
There's identity, there's NFTs, there's gaming, there's so much more that can be done. And we're basically, right there to be able to reduce some of the friction in terms of swapping token to token within any of these dApps. So that's where I think, like, as Ethereum grows, I think Kyber will grow with it.
Uh-huh. So is your approach, at this point in time, does Kyber sort of like approach different dApps and different platforms and build a relationship that way, or is it mostly like organic growth that happens?
I mean, it's a mixture of both. We
Okay.
are seeing a huge number, like we'll many times hear about an integration after the fact. And for us, that's the cool part about it. We don't have to look out at what's out there. People like recognize that Kyber is a very good solution for that. They have an example of over 70 different dApps, so they'll just integrate it.
Hmm.
But of course, the Ethereum space, there are like a few dozen great projects and we know each other well. So when we see like a new one coming up, we will talk to them and see how we can help them through Kyber or through Uniswap, or I mean, it's an ecosystem that helps each other out, even though it is in competition with each other as well.
Yeah, yeah, absolutely. And speaking about this growth of the DeFi ecosystem, you mentioned yield farming and all these new things that keep cropping up every 6 months, every 2 months, in some cases. Why, I I think there's it's sort of agreed upon that there's a bit of an acceleration in the growth of the amount of people who are using these DeFi platforms and holding these DeFi tokens. That's just occurred, within the fairly recent past, just this year. What are your thoughts on why that's happening now?
So everything happens in kind of phases where you build one block of brick on top of another, so you have a
Hmm.
strong fundamental. So if we were 2 years ago, you couldn't have built most of these products because the infrastructure wasn't there. You didn't have all these liquidity providers you could use for your DeFi dApps. So first
Hmm.
of all, we went and built that layer, like 4 or 5 different projects, like Kyber, like Bancor, like 0x. They all like started bringing liquidity to Ethereum. Once we
Okay.
saw that that was viable, that's when the other DeFi products said, oh, I can combine this and that. I can start combining and using the composability aspect of Ethereum, which is like one of the main strengths, to actually start building even new things. Because when you look at yield farming, and it's just like moving from one asset to the other. Well, there has to be liquidity in the market for any of this to function. And now we
Hmm.
have very strong kind of Lego bricks to bring that liquidity. So that problem is gone. So that's why you can start building this second layer of decentralized financial applications on top of that. So I think that's why it's caught on. And as you have an explosion, the type of dApps, that kind of expands the scope of Ethereum as well. It's one thing to have a world where there's only DEXs, but it's another to have DEXs and margin trading and insurance products and prediction markets and yield farming and mining. And, it sucks in more people as it grows.
So this first layer of like liquidity protocols, token building, providers like Bancor. So that was sort of like the first phase, but now you see that we're moving into a second phase, which is that these dApps are, after the foundation was laid, dApps are actually building products that people can use in real time.
Yeah, exactly. I mean, and this has started happening since 2019, really.
Hmm.
Yeah, for sure.
Yeah. Um, so so I wonder, like, there's been some talk, that some of these tokens, some of these DeFi tokens, like, for example, Comp and Link from Chainlink, like, have been performing very well uh, over the last month or 2 months. Do you think that the increased amount of attention that's been on the DeFi ecosystem has caused a little bit of overinflation? And I ask you this because there, there are analysts and commentators and whoever in the cryptocurrency sphere who are sort of drawing this parallel between the DeFi ecosystem now and the ICO boom of 2017. And obviously, that's a little bit of a false equivalency. Like, 2017 was very different in a lot of ways. But do you think that there is some overinflation happening at the moment?
Yeah, I mean, I think I agree with that assessment.
Mm-hmm.
So in 2017, if you look at the actual value that existed, I would say 98% of that was speculative value and only 2% was fundamental value. And
Mm-hmm.
over 18, 19, as the market deflated, that fundamental value, that ratio kind of went higher and higher and speculative value kind of dropped. So now what I'm seeing is that we're going back into that kind of, the speculative pie is, the ratio is kind of increasing compared to the fundamental value. And
Mm-hmm.
not because these products are not amazing, they're super amazing, but I don't think like a governance token can have a value of, I mean, it's very arbitrary, but when I see like a few $1,000s worth of valuation for some kind of governance token here, I'm not sure the capture mechanism
Mm-hmm.
allows for so much value to go up. I think it's short term, basically. And from the analysis I've seen is that there should be kind of rebalancing and a correction at some point, especially if more people kind of join in. And
Mm-hmm.
another point I'd like to make is that, and I tweeted about this recently, we're seeing, let's say, $3 or $4 billion of value locked up, and that's being celebrated. But no one's actually talking about the user numbers.
Yeah.
Like these projects don't come up and say, oh, our users number have gone up from 10,000 to 100,000, because they haven't. They've gone up maybe from 500 to 1,000. I mean, it's still very, very small, that I don't think it justifies $1 billion valuations of any of these kind of platforms as it is.
Mm-hmm. So, do you have any thoughts on how these platforms might go about bringing more users into the DeFi ecosystem? So that a little bit less of this growth is sort of speculative and more of it is coming from actual usage, or do you think that's just something that will happen organically over time?
Yeah, I think it'll happen organically over time. And on top of that, you'll have the like the speculative kind of layer going up and down and pumping and dumping. But at the end of the day, all these teams are working their asses off. Like I
Mm,
see every time I go to a hackathon, I see the kind of new innovation that happens. And that doesn't stop. And the result of that is over time, the DeFi pie or even the Ethereum pie keeps getting bigger and bigger and sucking in more people and more people, only because it doesn't really exist in other blockchains to the extent that it does in Ethereum. So I see that growth kind of continuing, and all teams have to do is just keep innovating, make sure they get their contracts audited so we don't have disasters, which keeps happening.
yeah.
And I think we should be okay. Well, and then there's a whole layer two, like the scaling problem as well, but that's a whole different thing.
Oh, yes, yes, definitely. But speaking of scaling, there's a lot of talk still sort of about like the viability of these DeFi platforms, especially when compared to their centralized counterparts, even within the cryptocurrency space. So, how do you see the relationship between DeFi platforms and centralized financial platforms developing over time? Like I think when for example, decentralized exchanges were first sort of making a debut on the scene, there was some talk that one day DEXs will totally take over centralized exchanges. But do you think that that's going to be the case, or do you think that these things will always coexist?
I think they'll always coexist because different people have different needs, and some people want some of the strengths that centralized exchanges kind of offer. But
Mm,
what we're seeing over time is that decentralized exchanges are closing the gap in terms of functionality, especially in terms of security. So I can see kind of DeFi, well, I mean, decentralized exchanges eating gradually into the volumes of centralized exchanges.
Hmm.
But it's a huge market. I mean, when you look at not just crypto, but in general, like exchanges around the world, that pie is so incredibly large that both of them can coexist comfortably.
Absolutely. Yeah, I think that's a really good point. Um, I also want to ask you, kind of switching back to what we were talking about earlier, that these DeFi platforms are seeing some growth in their usership, but it hasn't been exponential. But I guess in your experience and from what you've observed, what are your thoughts on who is actually using these platforms? Like, often there's talk about, like DeFi platforms are built for people who are unbanked or, et cetera, this, that, the other. But do you think that that's actually the case, or is it sort of like DeFi platforms are being built for and used by basically the same group of people?
Yeah, it's definitely not the unbanked at this
Yeah.
stage.
Mm.
As we said, like the percent of people who are using DeFi products, it's like an order of magnitude less than 0.1% of the population.
Hmm.
But I mean, I don't think that's like some people say, oh, that's an issue, and I raise it as something that we have to be aware of, like user numbers. But at this stage, so early on, I think it's okay that it's almost like a circle of people, because these guys are taking risks to innovate, to experiment, to push the boundaries, to lose their own money when things go wrong,
Hmm.
and they're happy paying $5 fees for it because there's congestion. So we can't really onboard next 1 million people anyway. Ethereum just will not be able to handle it. So I'm completely happy seeing it as a small group that gradually expands over time, and as scaling kicks in, and we can accommodate more people and transaction fees drop down again and UXs improve and the whole kind of experience is improved, then I think it is going to spill out into the developing world and like more globally, basically to encompass millions of people and not just tens of thousands of people.
Yeah, I think that's a really good point, that it's almost like a testing phase at this point, like, that, and it's maybe a good thing that these platforms aren't so widely used, because as you mentioned earlier, we have had some problems with code that hasn't been audited properly and things like that. Um, so what, do you think that the launch of ETH 2.0, is that going to adequately address some of the scalability issues that are in the DeFi ecosystem, or do you think that there's going to need to be more development in order for DeFi to really be meaningful in the larger world?
Well, technically, it is going to bring speed improvements, but I think it's a bit too early to kind of picture how it might look like. I
Mm.
mean, there is some kind of questions around whether all the exchanges will be, have to coexist in a single shard to maintain composability, or if you can do it through different shards, and what are the kind of limits of using different shards. So there are a lot of open questions.
Hmm.
But between these efforts, and there's like super smart people working on it, and between the layer 2 solutions that are being worked on with ZK rollups and different kind of technologies, I think somehow we are going to get there, but I can't really give an answer of how exactly architecturally it's going to look. But either
Hmm.
way, it's going to be better than what we are using right now.
Yeah, absolutely. Um, so provided, that everything goes well and that we see, increased scalability and increased usership in the DeFi world over the next several years, where would you like to see Kyber headed? Say in 5 years, what would you like to see Kyber doing in 5 years?
Yeah, that's a good question. And I mean, ideally, it'd be being used anywhere that one asset needs to be converted to another asset.
Hmm.
So if you think that many of these tokens are used as a medium of exchange to exchange from one value to the other, Kyber has the perfect, well, okay, Kyber has an amazing architecture that allows all these assets to be provided for by liquidity providers and push downstream. So we can see that being used in almost anything. It's like the liquidity source for the Ethereum ecosystem. And you might say, yes, but there's Uniswap, and yes, but there's Bancor. But the beauty of Kyber is because any liquidity provider can be plugged into Kyber, Uniswap and Bancor are already plugged into Kyber. So they already provide their liquidity through Kyber. So when you make an exchange through Kyber, it can be coming from Uniswap or any other of dozens of different liquidity sources. So I think we have like an important role to play in the future, like we've done for the last couple of years. So I think we'll just keep growing as the Ethereum ecosystem keeps growing, and we're happy to be on this ride and see where it takes us.
Absolutely. Deniz, I want to thank you for your time, but before we go, are there any announcements that you'd like to share? And can you also say where our listeners might be able to find more about Kyber?
Yeah, so if they just Google the Kyber blog, they can get so much information. We have Telegram group, we have Discord channels, and right now all the excitement is around the Kyber DAO, and we would encourage people to check it out and see what the largest DAO on Ethereum looks like right now.
Mm-hmm.
We just had our first vote that ended in over 2,000 people voting, and I think like a third of all the KNC supply was used to stake and to vote on. So for us, it's incredible, it's incredible times, and it's very exciting for us, and we love people to kind of look into it and just to learn and to ask us questions. And yeah, they can go to the Kyber blog or kyber.network, or any of our social medias, Kyber Network.
Okay, Deniz, thank you so much. It's been such a pleasure to talk with you.
Yeah, likewise, Rachel. Thank you.